Good weekend, all. Ira Epstein with your SPDR ETF wrap-up. And this wrap-up's your weekly edition for this Sunday, the 9th of January, 2022. What an interesting week. You know, we just heard Joe Manchin come out and say this weekend he's no longer in favor even of a $1.8 trillion. So, started off, as you know, this Build Back Better America, $3.5 trillion. He was holding the line at 1.8. They didn't meet him quick enough, and now he's off the table. I think he's off the table for any size plan, and they can go parts and parcels for something that he might or might not agree with. They have their hands full, and I'm talking the White House, the Biden administration now in getting anything done. They're going to have their hands full with the vote that they're now traveling around. Omicron is yet to peak. It is not even close in the U.S. We're already seeing the likes of Walmart's, FedEx, Starbucks, Walgreens. I can tell you a number of different places. Ours are starting to get in jeopardy. They're losing staff to work because of the Omicron coming on. It's not that people don't want to work, but if you do the 5-day quarantine, that's it. I have many friends that have now got the COVID. They're all physically fine. They're testing positive, but my friends, the vast majority of them, in fact, I don't know any right now that aren't getting vaccines. I had one that didn't, and as I told you, he's now 1 month in the hospital. I'm going to call today and see when he's coming home. He lived, and that's the good thing. A month. Can you imagine that? On respirators, staph infection, a disaster. All because you don't want to get the shot, which is a big battle in America. We know that. But if you're watching what's going on in Europe, just remember, people that don't get a vaccine, and this keeps going on, those that did now resent those people, and it's going to get worse and worse. And if the Supreme Court upholds that if you're a corporation with 100 or more employees and your employer says to you, you either get vaccine or you're fired, if that's upheld, another new problem. All right? In Chicago, I know I went out to dinner. I told you, it's so simple. On your phone, they're allowing you to either shoot a picture of your car, but there's many apps that have it. You just take it, especially if they got the QR code. They take that, boom, you're in. Did the whole process honestly take a minute for 4 people? No. I don't know what the big deal is. Okay. So when we come to XLK, you have what's called the sideways churn in the market. You can see it pretty clear here. And remember, these are weekly charts, not the daily right now. The pattern is still bullish because you have higher lows, higher highs, but the pattern is no longer bullish if you hit 164.35. So if you take out the low of 2 weeks ago, right through here, that breaks the pattern. Then you'd have a higher high, lower low. Often when that occurs, you look to see where the closest moving averages are because that's what traders will focus on. And that would be about $1 lower than that at 163.36. The problem would be you'd have the higher high and lower low, and you'd have stepped away from the support there. In the past, that number has supported this market very well all through 2021. Therefore, when I see something like that, I go, well, is anything going to change it? I know that the marketplace is punishing everything in the tech sector as they're saying interest rates are going to gallop higher this year. I'm not in that camp, but that's what the analysts are saying. They're going to gallop. Now they're talking 4 rate hikes in 2022. I have yet to see how they're going to do that if this Omicron sets everything back. Your supply chains aren't full. If you go to the ports in Los Angeles, I just read there's 105 ships there. That's a high waiting to come off. They have ships from October in the article I was reading still trying to unload their goods. I know that the Biden administration was out there saying how they've done a wonderful job and how the supply chain has been fixed. Forget the name Biden. Let's just call it the president, okay? I don't care if it was Trump, him. I'd look at the same thing and go, what are you talking about? Is this a photo opportunity? Why isn't that number down and down sharply? 50 ships, 40 ships, whatever a norm is. I think the norm was 20. XLK, higher lows, higher highs. So you're watching here if you hit that to see what it is, and that's with the Bollinger Bands. What has been holding back the retarding of the gain? It's the Bollinger Band. You don't buy in the Bollinger Bands. Now, can the market rescue itself here? Absolutely. Just don't take out, in my opinion, 164.35. Momentum, however, is against the market. It had been locked in. We call this embedded. And when you lose that, it's often a sign before the break occurs. That's the ideal thing. The price is about to drop. The first spot is often the 18-week average of closes when that occurs. KBE, what you've really done here is this market is embraced. Oh boy, this is a big move because now they're talking all these rate hikes. Banks will be able to make the spread between what they pay you, what they take in, pay you as interest, and the higher rate that they're going to get. Well, that's profitable. The problem is when you get to a Bollinger Band, the way I teach trading, that is where the pros are coming out, not in the market. So I'm saying to you, I think that the pros on Friday said to themselves, we hit 59.38, the number's 59.31, so long. Thank you. I'll deploy money again on pullbacks and see what the chart might look like. That's what I think happened. XLI, the industrial sector, same thing. The Bollinger top is 108.10. You didn't quite get there, 107.88. But I think you're in that zone where the pros are now starting to take some money off the table. I do think the market is still going to be bought at 103.55 with stops way down here. I think it's a bit too much risk at 99.56. But I want to see what the week unfolds like. Obviously, I'm looking for the market to be on the defensive with all the new Omicron cases, with the fact that the Build Back Better plan, that's dead. Chuck Schumer can talk all he wants, Nancy Pelosi, that bill is dead. They might be able to take pieces and get pieces of it done, but the bill as it stood, call it something else. Don't try to kid everybody. Energy sector, what do you do when you get up to the upper Bollinger Band? Out you go. Now, you didn't quite hit it. You're still a quarter away. That doesn't mean you're not peeling something off if you're a pro. You're not trending. You have a vertical move, and you're into already an area where you still have the momentum up, but you got to be a bit cautious up here. You don't stay over Bollinger Bands very long. SPY, you talk the gift of gifts. The market went to the Bollinger Band and let the pros out of this market in the past 2-week period. I was pretty thrilled with that. I think you're going to pull back. Now, what's the pullback? Each time the market has gotten down in 2021 to the 18-week average zone, you had one period here recently where it didn't do too well. You fought. You stayed under it, very rare. You kept hitting there. That could be what this market has to do again. Pull back to that, fight a battle. Keep your eye on momentum. If the red line closes this week under 79, the odds are you're going there and possibly lower to fight that battle, and we'll judge the battle at that time. In the emerging markets, still very much in the bear camp. I'll give you the number that would take me as a chartist out. Take out not this week, the week before's high. That number would be 49.35. If that's taken out, I'd end up with a pattern of higher lows, higher highs, putting into play the 50.38 level, and I'd bet you anything the momentum would turn on that to the upside. It's not a buy signal, it's a signal to be out of shorts. That, I think, actually happened back here when we were talking right through here, starting, let me give it to you, right into this period here. The week of December 17th, just before Christmas, the combination of the 100-week average, the lower Bollinger Band, I don't care what momentum's doing, that's formidable support. You're playing, if you get through that you're going to go to the 200, and you could. But if you're short, I don't think you want to risk too much. And when you did this type of action, now you're going, well, how do I get my money back now? And that's what you're facing. I still say if it drops, support will be at 47.92, 47.72, and you take out that high, I think short covering will hit. Gold has been just super disappointing. I've been a broken record with it. This was the play right here. Since then, there's been no play. You have the 100-day average in green, just over the 18. The market's fighting at the two of them. If it slips, will you put in the play getting down here? That's what bothers me. I don't know if you will or won't. If you clear, and I'll give you what would be bullish, I think if you can clear, not this week, but last week's high of 170.104, I think all hands on deck. I think you'd see immediate buying come in to get to that Bollinger Band and hope that this turns out to be a base for the upside. So I'm giving you both sides of the story that I'm seeing. In gold miners, you failed at the 18-week average of closes. The pattern is a lower low, higher high. I'm not as bearish as you might think because that 200-week comes right in with the lower Bollinger Band. Momentum is down and bias is down. Momentum in the stochastic, bias because you're under the 18-week average to the downside. Kathy Woods, big trouble. Remember, a year ago, not this year, last year, she was $160 now. It's $84 a share. And I know she's loading up on all these Chinese stocks and other, well, she had those. Then she did some rotations recently, but the market's not buying what her rotations are. It's early in the year, remember that. Trend down, bias down, but for me, no, I think the pros are coming out of this. I think that they're saying you're back to the Bollinger Band. You don't stay under it very low, another area. What did happen, though, is the market got under and didn't hold the first challenge, watch this, of the 100-day in the lower Bollinger Band. So you came back, played with it a little bit. Suddenly, now that 100 becomes the resistance if you go up to it. So you went up to it December 23rd. Hung around there, and this is what you did one more time. In another rally, I'd still look for the resistance at that number. What you have to be fearful here of is if the 18-week crosses the 100. That would be super bearish, could add another leg. In Amazon, we've talked that as you get into and through Christmas, especially in a year where you don't get many sales, the supply chain wasn't there for retailers having to dump an awful lot. I'm sure you've seen that. I've seen it, that's for sure. So what do? Well, the sales are going to drop off, and that's where you're at. I know that my wife's in retailing, and they have seen the same thing, been hitting their stores. And you're seeing how it's coming down here. You might be headed to this lower Bollinger Band. Obviously, it doesn't help that people are scared to go out with this big wave of Omicron, that stores they want to go to, some of them are closing. If you're ordering goods online, you're getting delays. I've been waiting on a set of routers to come. It was supposed to be here yesterday, still not here today, and I just keep getting updates. It's on its way. I'll bet you anything it has to do with the Omicron. In Apple, I was looking for the failure on the rally back up here. We had talked about that. So this was that string of beautiful rally, pulled back, came back, and now I think long-term chart is still bullish. I don't want you to think I'm bearish. I just think the pros came out there, and the key is to not take out 167.46. If you do, you could be wanting to get back to the 18-week at 157, and I think the boys will be sitting there going like this, I want to be a buyer. One of the things I think the market is doing, the market, I think, the smart people are hoping you get a 5 to 10% drop in stock indices. They want to buy it. The school of thought is once this is past us, the economy is strong, that was your buying opportunity again. Write that down. Get it into your brain somewhere that the big money wants a break. That doesn't mean they'll engineer it. They want a break to rotate into. Now, I don't know if they'll rotate into the tech stocks the way they did, but there'll be rotations and there'll be buying that shows up. Tesla finally threw out a signal and continues with it of lower highs with a lower low. So once Mr. Musk was through selling those billions of dollars of shares to pay his tax bill, you came back up. It certainly helped him tremendously when you saw the amount of cars that he's been able to deliver. He doesn't have the chip shortage, apparently, the way that the other manufacturers do. Oh, by the way, this weekend in Chicago, the paper in the auto section teaching you how to buy a used car when they're up to this crazy price. What do? And for new cars, forget it. Forget paying, getting a discount. That they're saying isn't going to happen. And then last, interest rates. And I know they keep talking it. Where are you? I say that the pros are taking their money off starting right here. They did it on Friday, and they'll do it right to the 200-day average, and they'll walk away for a bit. This looks to me to be an important top. I don't think we're going to visit that again for a long time unless something in the economy takes a drastic change. Barring that taking a change, I think that you've now established your top in the market. Now the question is, what next? And that's where the what next always come in, because in the mornings, and I'm talking 5:30 in the mornings, I start recording and get a video out to you. My goal is around 6:15 in the morning. Why? I want to be the guy when you wake up, that you're not only just looking at the market, oh, the Dow is doing this, the S&P's that. What about all the other parts of the market? I want to be the guy that you first look at the futures. Stock market's not open yet. So everything in the energies, the TLT we saw, the stock indices and so on, they're waiting to see what the futures do, and then at 8:30 they open. That rush of money comes in to match up with what the futures have done. That's that first 15 minutes, and it's always very volatile. I back off from that, and I start recording around 10 minutes to 9. That's what I typically do if there's no reports coming out at 9 o'clock Chicago time. If there's reports, I wait until after 9. I want to get that into the market and give you now a video of 40 futures, 40 of the ETFs and individual stocks included with those ETF spider videos that you're looking for. Now, I invite you to write me too. As a subscriber, just go to YouTube or write me. You all have, my subscribers have my email address. Ask me what you want me to cover. I rotate stocks within all this. On the YouTube videos for you, if you write me there, I will look at what we're doing and rotate there as well and try to bring in new stocks for you or new ETFs for you in that as well. I love to do it. I love to do the different rotations, and we're going to make that a mainstay of this year. So go to iraepstein.com. It's going to cost you a couple of dollars if you want to subscribe. Not much. You're getting 48 videos, each about 18 to 20 minutes long, in a 30-day period for a $16.90. If you don't like it, you can quit right away. You can manage your own subscription right in your members' login portfolio. So you go in there, you do what you want, quit, add others. You can do whatever you want there. iraepstein.com under research. I'll see you all on Monday.